We've been talking to you for the last, 2.5 years throughout the pandemic about the growing indebtedness of some of the world's poorest nations who have been left with very fragile economies after the pandemic. Is intriguing now, though, the hidden danger of hidden debt. What does that mean, and the difficulty of what these nations are facing?
So, unlike a couple of years ago when the hidden debt problem, it became clear was governments had borrowed from China and other non-Paris Club creditors, and the amounts of the debts owed were not known. I think the problem we're dealing with in this World Development Report is the issue that non-performing loans, there has been a great deal of forbearance during the crisis, and so I think it is reasonable to expect that non-performing loans are not telling the whole story, that indeed a lot more firms and a lot more households may have problems. And, this brings memories of zombie loans in other cases where, there's financial stress, such as we have during COVID.
So it also comes, and I want to bring this right up to the top, because for financial markets and investors right now, top of mind is the fact that the Federal Reserve and other leading central banks are ready to tighten. Some have already started. At a time like this, does this put extra burdens on these nations that are up against the debt wall and the people trying to help them? Is there something special that the Bank of Japan, the ECB, that the Federal Reserve should be incorporating in their policies to help them?
Look, Kathleen, we've talked about central banks a great deal over the years. Central banks, the major central banks, are largely responding to domestic conditions. And we do have a 40-year inflation spike underway. So I don't think central banks are going to be responding to the frail situation in many of the low-income countries. But the rate hikes are likely to go much beyond just impacting low-income countries. They'll affect emerging markets, the larger emerging markets as well. Will have to deal with higher financing costs and possibly deal also with less appetite for their debt from foreign investors.
So there's a lot of risks out there, and the World Bank now in its report, you're saying that early detection of financial risks is crucial here. But as you mentioned, perhaps some of those metrics like NPLs do not clearly reflect the problem. So how do you do that?
Well, look, I think this is the time for really auditing, revisiting bank balance sheets and getting a true assessment of where the weaknesses lie. At the World Bank, we have corporate surveys that tell a different story from the non-performing loans. These surveys look at medium, small businesses, and those businesses are saying that they're either in arrears or expect to be in arrears in the near future. And I think that's a signal that, again, non-performing loans may not be telling the whole story. I think this is particularly important because everyone wants a recovery, and we've certainly had a significant recovery, not just in the US in particular, but in advanced economies at large. We haven't seen anything resembling that in the emerging markets, and certainly not in the low-income countries that are, so much at stress here.
Carmen, this feels like a replay of what we saw in China with their off-balance sheet debt problem, and it becomes a situation where there's just a great big ball of debt rolling from, one arm of the government to another arm of the state. How difficult is it to get transparency on these off-balance sheet numbers? And does it concern you that the deleveraging in a lot of these economies has taken a back seat with the pandemic?
I think this is different than a lot of the issues that came up in the context of China. I think it's less about off-balance sheet problems and more about, again, the transparency of bank reporting what are potential zombie lending, what are potential already distressed assets. I think that moving ahead, what we really need to see is a very strengthened role for supervision and regulation. Remember, this did not start as a banking crisis. It did not start as a financial problem. But the very deep and protracted recession that we are getting in a lot of countries is really shaken up the health of corporates, the health of households, and as a consequence, the health of financial institutions. And one of the things we highlight in this report is that there's a great deal of interconnection. So if banks have a problem, ultimately it will become a government problem as the government tries to assist and help banks. If governments have a problem and the banks are holding a lot of government debt, the banks will have a problem. So there's this element of doom loop.
Well, Carmen, then where does the lifeline have to come from? Because many countries are still struggling with the pandemic. They're not even in this early recovery stage like some of the more advanced countries that have caught up with their economies. Their central banks are ready to respond to stronger growth. Who helps them? What's the solution here?
So the multilateral institutions, the IMF, the World Bank, other multilaterals have been doing a great deal of new lending to support these countries during the pandemic. But I think the next phase, especially for the low-income countries, which as a group, they're in the worst shape already, fast debt restructuring is critical. And what we've seen so far, last year we had the introduction of the common framework, and to date, more than a year later, we haven't seen a single debt restructuring materialize. So I think the G20, it's a good message for the G20 to remember that rapid debt restructuring means really helping these countries avoid a major reversal in development and in poverty and in all the social indicators are suffering setbacks.
So does that mean some kind of special treatment? Does that mean special focus on things like digital services to make these systems more efficient? Or is it that real fundamental level where you either have to provide resources, provide funding, and or say we're just going to flat out forgive some debt? Outside the IMF and World Bank, is that what the G20 and other wealthier nations need to do?
I think that what's more in the ball court of the G20 is the issue of debt forgiveness, specifically debt restructuring, bigger, faster write-downs of existing debt. And of course, the digital economy and needed structural changes in these countries will play a vital role in sustaining recovery over the medium term. But the more immediate needs from the G20 is the need for speeding up debt relief.